Hi everyone, this is Param. In the previous video, we did learn about what is the need for an investment and who are the regulators in the market, trading participants, and brokers. Continue to watch this video till the end for a better understanding, because if you don't understand now and the future episodes, you might not get the best knowledge, right? So let's get into the learning. Before we know more about the IPO, let us try to understand the basic concept of the founders and the investors, who is actually the origin of the business. Okay, so the investors are basically the angels, the venture capitalist, the bank, the private equity, and that comes to the IPO, right? So now the angels. Let us take an example that this is Kim, who comes with an idea of an e-commerce site, and he is thinking that this is kind of a very unique idea that will give him a very good money. Okay, and because the idea is very attractive and innovative in terms of collection of kits like apparels, electronic gadgets, cards, toys, musical instruments, sports kits, and vouchers. And actually the specialty of the business, it's not delivered by person, it is delivered by the drones. Okay, so he is kind of very confident, and this is a unique idea and it will definitely succeed in the market. Okay, so he is not coming from a very wealthy man, but he has some savings from the family which he can contribute. Okay, and as all the entrepreneurs facing some problem, he don't have an enough money to bring his business. So he will definitely approaching his friends, relatives, banks for the loan, but he finally arranged some portion of his own and from his friends. So these are like his friends who is ready to invest the money. So now Kim is ready to invest 40 lakhs, and his friends are ready to invest 5 lakhs and 5 lakhs each. So this is called the seed funding of the company. So with this, they are able to altogether put 50 lakhs. This is called the seed funding, the original investment, right? So let's get into little more detail about what is really happening once they start the business and grow further. Okay, so as I said, now they have to step into more business, right? So they have to expand the warehouses, offices, drones, and everything. So with that, they are estimating that the capital needed would be around 1 crore. So what to do in that case? They are approaching many private investors, like that those people called as the venture capitalist. So he is able to get a venture capitalist who is ready to invest that 1 crore need. Okay, so now since he is going out of his very closed investors group, he has to really share his company ownership. So with this 1 crore, let us assume the company is having that unallocated shares of 50%. Maybe if I missed to tell you that. So originally they had 50 lakhs. With that, Kim is taking ownership of 40%, and his friends are taking 5%, 5%. So the company as a separate entity has that 50% unallocated shares, and now this VC, the Series A funding, is actually taking 5% of ownership from the unallocated fund. So now the shareholding pattern becomes promoters, angels, venture capitalists. Okay, so let's get into the next scenario. So now with the venture capitalist in plan, with this investment, they are able to grow the business further. So now they are, really planning to expand the business further. So with more offices and delivering, expanding his business to the nearby site. So that's when the banker is coming into place. So for the current expansion, he thinks that 5 crore would be the additional money needed for this. So actually, it is not necessary that they have to really go for really loan, but the company can take the money from the interns, and meaning the profits, intern accruals, and they can approach for another VC for Series B funding, and again the loan, right? So with this 5 crore requirement, let us assume the company has 1 crore with them as a profits that can be invested, and VC funding. So another venture capitalist, ready to contribute for the company, that is about 3 crores, and they are finally taking some loan from the bank, which is for 1 crore. So from the total unallocated company shares, now the VC Series B is taking the ownership of 4%, and the company has unallocated share capital of 35%. And remember, the banker is not going to become an investor because we are just borrowing from them. So they don't have any ownership on the company. Okay. So then the next source of money where we can get from is the private equity. So now he is planning for further more expansions to bring the business across India. So for this, the capital is needed 10 crores. Now he is looking for a private equity. So why private equity? Let us assume that this 10 crore is a very big money. So this big money, the regular venture capitalists or the friends definitely cannot bring that valuation to the company. So that's why we are approaching private equity, and he is able to get that money also. So the private equity person now is really taking 15% of the company's unallocated shares. Now the company becomes like unallocated share capital of 20%. Maybe we will discuss about this capital allocation in detail a little later. So now the company is really very rapidly expanding because of the unique idea of Kim and everything. So after the very successful business, now he is thinking about bringing the company across the world to the international market. So for that he need to conduct the market research, the legal works and business setup and everything. So for that it requires 50 crore. 50 crore with the private equity and venture capitalists, it looks like it's not a possible idea. So the possibility of getting money is from the company profits, again debt from the banks, and issuing bonds and IPO, right? So debt from banks and issuing bonds, it's again putting the company into debt, which is not a very great idea, but IPO would be a good idea. So now this company is stepping into the IPO world. Okay, so now they are filing up for the IPO, and they got the business and everything happened. So now what is the benefits of going IPO for the company? One, the capex, the capital expenditure. As the business grows, as the investments are going very high, the small investors definitely cannot fund it, right? So we are taking the money from the public, where public can give the money with the small portions that become a very big money, right? And the next one is avoiding huge debt, right? As the company is really growing, getting more loans outside is really not a great idea. So avoiding huge debt will be a beneficial for increased cash flow within the company. Next one is reduced risk. As you might know already, if you're issuing shares to the public, and each and every investor who is taking the ownership of the company, their liability is very much limited to the investment, whatever they have made, and not more than that. Okay, exit early. As you are an investor, the venture capitalist or private equity, if they think that I have really made a very good money from this company, let me take out my profits and I'll exit, they can exit at any time. Okay, employee stock option, and this is another very important area, because you did grow your company this big, and the employees who already worked in the company, you have to really keep them for your successful business further. So employee stock option would be another thing to retain your employees, and also it is beneficial for employees to get the stocks with a discounted price. And the publicity, the moment you are getting into the IPO, the publicity of the company will easily, reach to the international level. So when more people know about the company, it will be good for the business also. It will be good for the capital expenditures expansion also, right? So with all these efforts, when the company are getting into the IPO world, right? It's not a very easy step getting into IPO. There are a lot of works involved in it, right? So let's try to understand with the shareholding pattern altogether. So as I said, the promoter initially came up with 40 lakhs, angel A, B, 5 lakhs each, and the total capital of the initial was 50 lakhs. And now that 50 lakhs is getting converted into number of shares with face value of 5 rupees. Then they have um, these 10 lakhs shares with their hand, right? So now the promoter is having 40% and angel A and B 5%. With that, the unallocated shareholding of the company becomes 50%. With venture capitalist A coming into business and B coming into business, the unallocated shareholding of the company becomes 41. The last, private equity, with that, 39% becomes an unallocated shares. So with the 39%, if you remember the last step when he's stepping into the international market, he really needed 50 crores to invest in the business. He's getting into the IPO. So with that, the 39% share with the face value of 5 rupees, he might opening for the IPO with per share value as 1,200 rupees approximately, right? So with all these efforts, if the public feels the company is really worth investing and the company can get more interest than expected, from offering from the public, that would really put him into a very good spot, and he will be able to get that capital whatever he is looking for, and he will further make his business very successful. Thank you for watching. We will meet you in detail in the next video. Thank you.